So let's get into this. My name is JJ Trades. We're just with Galaxy here, and basically, I'm gonna show you what took me from unprofitable to profitable. Here, let me delete my levels. Here. What can I delete? Let's do Nvidia. Actually, no, it's not a good example because let's just take a random stock right now. SQ, and let's see what we can do. So, really, I've been trading for about I want to say 8 months as a trader, right? That's when I fully got into day trading. And the first few months, I was going through the phase with indicators like you want to, like all these indicators on YouTube, like, oh, get this indicator or like put this indicator on your chart in TradingView and you'll become profitable. You'll make like 17,000% returns. And I'm legit quoting what the video title said. And I was like, bet, let's try this out. Um, I guess it was fun while it lasted. Didn't last very long because, to be honest, indicator strategies rarely work unless it's some AI based indicator. Very rarely do they work, but there are some private indicators that I think work. But generally speaking, if you're a beginner and you want to become profitable, stay away from indicator strategies. They're good, but I'm talking like buy and sell indicators for the time being, right? Because we want to learn. Um, when you first start off, it's very important to learn how to chart and how to place trades than to rely on indicators. I think indicators can be great to add on eventually, to add them onto your strategy, to use them in confluence with your strategy. But especially when you start off, for the first, I want to say half a year, really be focused on learning how price is moving, why price moves the way that it moves, and how can we use it to trade and make money. So I'm going to start off. This is going to be my process from A to Z, how I basically find trades and how I enter trades sometimes as well. So we got Block SQ here. I don't trade this stock much, but it's a good example. Just a random stock because I want to be as transparent as possible. So to start, you want to get this indicator for EMA. Smart money concepts, you don't need that indicator, but mostly you want to get the 4 EMA indicator, right? It just shows EMA's kind of general direction of the market. It's very good to use in confluence with your strategy, with my strategy. So we have the chart. We're going to go to a 1 hour. I want you to make sure that you have extended hours trading on. It's very important because you can get more accurate levels, more levels that are correlating to current price action. So on the 1 hour chart, we're going to look for key levels. Key levels are areas of interest where price has bounced off, used as support, used as resistance, just where price has bounced. I would prefer more than 2 times. So you want to look for a minimum of 2 to 3 times, preferably the more the better, right? Because stronger levels hold better. So yeah, we're gonna go and we're gonna get the horizontal line. If you guys need a tutorial of TradingView, they have many on YouTube, or you could just DM in Galaxy Trades, and we will see what we can do. So right off the bat, I see this key level, right? Because it was used as support here, and then it was used as support here, and multiple times because see 1, 2, 3, 4. So this is a good level, right? Um, to trade off of, right? We're gonna go back and we're gonna see. So another good key level is right here because you can see we bounced right here, boom, resistance turned into support. That's a very good level. That's something you want to be looking for. Another level is right here because we used it as support. Right here and right there and then right there. This would be, why are these lines red, you might ask? Because this is going to be our puts entry. So I don't have replay mode on this account. I would need to log into another account. I don't have replay mode on here because it's not premium, but you would generally pre-market. I would see, so for red lines, so let's say if price is over here, I would make the lines red, anything below price, to be our puts kind of target, because we're going to be playing downside, right? Okay, cool. So that's our red. Now we're going to look for green, which would be our calls, right? So I would set green as, if price goes above, we're looking for calls. These are all great levels. I'm not going to mark out every level, probably, just because my computer is literally dying right now from screen recording. I have a lot of tabs open, MacBook type stuff. But yeah, so we'll go on a 1 hour, and once we mark it out from 1 hour, we want to go to a 15-minute chart to refine our levels and add more levels. It's important to have accurate levels, and the 15-minute chart will kind of help you. See right here, we found a level because it bounced, used it as resistance, support, all that good stuff. We're going to go back here because that's where price action was. And guys, I'm being completely transparent with you right now. Like, I have never seen this chart before. I'm using this completely just transparently, guys. I've never seen this chart before on SQ or anything like that. So, honestly, there aren't many levels we can add. I want to add a level somewhere in here. Yeah, there's not much we could really add. For puts, we can add right there because we bounced right there. So I'm going to go ahead and change that to red. And you guys just want to kind of do that. Go from 1 hour to 15 and kind of refine your levels. Boom. Cool. So let's say market opens, right? We want to enter off of a 3-minute chart. 3-minute chart. These levels aren't really correlating to right now that much. But you know what? Matter of fact, yeah, they're not going to correlate that much because price action is in a different spot. But all these levels are always going to be valid. I just want to go back. Oh my goodness, I don't have premium. Gotta love it. So for example, today, right, we have key levels. Yeah, don't mind that they're green right now, but as an example, right, these key levels, they're still valid. They're still valid till right now, right? So how could we have traded them? I've never seen this chart. Look what happens. We open. I would have had this red, all these lines red, because price action is right here and we're looking for puts. So I would have been like, puts entry would probably be right here. And always for calls and puts, you want to put it as yellow. So I would say like calls entry, and then like right here I would say puts entry. And I'm gonna delete this level because it's kind of like in the middle. It's like not below price action, it's right on top of it, so it doesn't really make much sense. But yeah, right here. And so I would go on a 3-minute chart. So 3 to 5 minute chart is generally for entries. 5-minute moves a little slow. 3-minute gets you better entries. And I wouldn't say you get faked out much more. I wouldn't use a 1-minute. 1-minute can be used if you're using 0 DTE contracts, which move very quickly, and you kind of want to, mark every cent that price moves because your contract moves a lot. But I generally trade 1-day expiration. Just give me more room. So right here, we broke with momentum. Most of the candle closed below this level, right? This is our puts entry. Literally half of the candle closed below, and this was a big candle with not a lot of wicks, right? You can go into candlestick patterns and all that kind of stuff. I just generally trade market open and intraday sometimes, but market open usually has a lot of volume, especially if we're trading 0-day expiration. One candle could be 50%, and I'm saying that from experience, right? So here we get a big candle flush with volume. Usually, I mean, it depends on your level, but first candle, you don't really want to trust the first candle that much. But in this case, since it had a lot of volume, this candle was a good candle, and we closed right below our level. I'm just like, okay, we have to flush, right? Obviously, this is all in hindsight. I'm already seeing what price action did, But in all honesty, I would have taken this trade because we closed a 3 minute candle. And so I would have set my stops. Uh, since this level, calls entry is a little high in stop loss, I would have set my stop loss probably in the middle of this zone, like in between calls and puts entry, just because calls entry for stop loss would be really, that would be like 60-70% in decay even. But I would probably set it somewhere here, and then I would just start targeting these levels. This is what's so important about key levels, guys. Right here, look. My first target would have been here. I would have trimmed probably 40 to 50% of my contracts. And then this would be my second price target. This the key level below, right below it would be my second price target. I would trim about 20%. And then typically after I hit the first or second price target, I always put my stop loss to entry. Or right below entry or above entry. Like basically if I bought the put for 1.30, right? So $130. I would set my stop loss like at 125. But generally speaking, I like to set it to break even. And yeah, over here we probably would have gotten like a 60-70%, if not more, gain. So yeah, I hope you guys kind of understood that. I could show more examples. My computer's struggling. It's a heck of loud right now. The fan's buzzing. But basically, this would be our calls entry. We would wait for a 3-minute candle to close over. And then especially if the EMAs are crossing or they're above, that's a really good entry. And a 3-minute candle close over the calls entry, we would enter calls. This would be our first price target, and then whatever key levels we have above here. And kind of what we did here, right? This was our puts entry. We closed a candle, 3-minute candle below our puts entry. I enter for puts. First, take profit. Second, take profit. And then whatever, I let my runners run as much as possible. After second take profit, I usually let my runners run, as much as they want, as much as they can, So that's kind of my general strategy. That's for a more of a market open approach. But here we also have a intraday approach that we can trade as well. I like to stick to 3 to 5 minute chart for intraday plays as well, so not really changing much there. I keep my key levels on the chart and I look for chart patterns, right? Let's look. Chart patterns. Let's see what we got. Boom, right here, guys. This will help you a lot. Especially in continuation of trend. I only like to trade chart patterns. Not only. I would say 70 to 80% of the time I like to trade chart patterns to continue trend. For example, this would be a, let's see, for example, right here. Bearish flag pattern or bearish pennant. Here we had, see, chart patterns are never going to be, very rarely are they going to be exactly to what the picture shows, but this is generally a wedge right here, right? Because we're creating a very short-term uptrend in a downtrending market. And how do we know it's a downtrending market? We're below open and we're going down on our key levels. We're crossing down on our key levels, which means we're in a downtrend. Just overall trend. Right here, boom. We get a wedge / a pennant. I would more call this a wedge, some kind of wedge. And I would enter probably 10 to 15 seconds before the candle closes, just to get a better entry. So I'd enter, or you could do a candle close to be safer. And I would set my stop. You could either set it above the candle or above this little high. I would have probably set it above this candle because this candle is a pretty big candle. And I would have taken first profits right here, second right here, and then third profits right here. But we never actually hit third profits. Right after about second to first take profit, I would set my stop loss right above break even to probably to right here, like right above break even, and then just let it do its thing. So I just look for these chart patterns intraday. Sometimes they work, sometimes they don't. But in my experience, if it's a good trend, if you're getting a trending market and you see these patterns, a lot of times they will work out. And you could also, honestly, Here, well, I don't know why it's not loading. SQ, come on. You see what's going on? When it comes to trading chart patterns, I would say trading chart patterns, you could also trade them both sides. Guys, that's the thing. A lot of people think that trading a chart pattern is one-sided. It's not. Like, I could have set, probably, since this was a wedge, it's kind of different chart pattern. On Tesla today, I called this trade out live in the Discord group. I took this trade right here. We had a chart pattern right here. Look at that. Look at that chart pattern. Beautiful. And my entry was right above this key level. Right when we broke, I was looking because we had resistance here. You could have been safer, took it right here. But right here, we crossed a key level. You don't always have to wait for a cross of key level, but we formed a pretty good candle above this chart pattern. And we just shot. I could have been like below this previous swing low, before this, not a swing low, but below this low, this market structure low, I would have wanted to take puts. Or this market structure high, take calls. And look what happened. I was honestly, because we were in a downtrend, right? So I was looking for a continuation to the downside, to take something down like this. But that's not what happened, as you see. We reversed trend, so I was ready for both sides. So I went up. So this is kind of an introduction. I also use key levels sometimes just upon break, but I generally like to have a support and resistance or chart pattern break. I like to use the trend because the trend is your friend. Remember that. I would always trade supply and demand, and I think supply and demand works, but it's not the strategy that I found crazy. I've doubled my account in one day. I remember when I was still paper trading a long time ago. I remember I was using supply and demand, and I was doubling my account. I had some good supply and demand trades, real supply and demand trades. When I first started trading, it was good. But I really switched to more key levels and trading the trend because it's easier. You get more trades, and I would even say higher win rate, and you get monstrous trades, like 300% plays. So I never really traded supply and demand. I've traded it for like three months. It was good. I only traded it a few times in my real account because I never had confidence with it. But when I started trading the trend, I definitely noticed an improvement. But yeah, guys, that's really trading for you, and there's more in-depth tutorials that we can do, like one-on-ones. Just contact Sam, Galaxy, or whoever is in charge, and we'll see what we can do with one-on-ones. But this is generally my strategy. It does go deeper, but this is just the general scope of things. I'll see if we'll make some webinars onto entries and all that stuff, but this is just the general idea. I hope you enjoyed. Honestly, whether you enjoyed it or not, I hope that you got something from this. Remember, the trend is your friend. Use the trend to your advantage, and know when to take profit, and all that good stuff. But yeah, thanks for watching. I hope this was good for you. I hope you learned something. If you have questions, message us, DM us, Discord, whatever you need to do. We're open. We're here, and yeah, that's what got me to be profitable, is really taking my profits early. Taking them at these key levels. Just taking my profits at a 0.5 risk to reward, 1-to-1, then 2-to-1 risk to reward, like kind of taking profits, scaling them along the way, and setting my stop loss to break even. That is so, guys, setting your stop loss to break even after you've hit 1 to 2 of your price targets, and that will literally, for some of you, that'll turn you profitable. That's what turned me profitable. Really, just know that trading at the end of the day is very difficult, and that you're gonna get stopped out a lot if you don't know where to take profits and if you don't set your stop loss to break even. Um, just know that. But yeah, that's the video, and hope you learned something. God bless you guys. May God truly bless you. May you guys succeed, and